This was the perfect place for Sakumzi Maqubela to set up his restaurant. Vilakazi Street, famous for the apartheid homes of Nobel laureates Desmond Tutu and Nelson Mandela, and the #1 tourist destination in Soweto. But like many attractions around the world, it's deserted. Sakumzi's has been closed since March, when the government announced a lockdown to limit the spread of the coronavirus. Unsure when the vibrancy will return to Vilakazi Street, his team is scrambling to find ways to repurpose his business. If not, he'll be faced with the painful reality of shutting shop permanently.
It does not make business sense for us to open and use companies that will come and collect when we have to pay them 30%. And then we still need to pay 30% to buy the cost of goods. We still need to pay staff and pay rent. So for us, we'll have to shut down.
Sakumzi's has been an institution in Soweto, attracting more than 100,000 patrons a year. There's also a clothing shop and a space for arts and craft dealers along this road, all facing the same fate. Executives of the biggest companies in the country are warning it's only going to get worse. They're urging the government to fully reopen the economy as a matter of urgency. Business for South Africa, an advocacy group, has also warned that if the lockdown continues any longer, the economy is going to contract by up to 16% this year, and up to 4 million people will lose their jobs. In Alexandra Township, Happy Moholo is already living that reality. In mid-April, he lost his job when the shoe shop he worked for was forced to scale down. Despondent, he spends his days holed up in the tiny room he's been renting.
Someone my age with no job, I become hopeless. To be honest, I given up in life. Like, I am ready at any time. I don't even wear a mask anymore, while I see no coming out of this whole thing.
Economist Imran Valodia is more hopeful. He says South Africa can use this opportunity to grow its domestic production and become less reliant on imports.
Large firms will look more to kind of supply chains in the domestic economy, and we're likely to see a kind of growth in kind of industrialization, a growth in kind of small business in South Africa that will be locked into those supply chains, kind of growth in levels of employment, and I think we're likely to see some degree of localization in the way our supply chains operate.
But for that to happen, Valodia adds, the wheels of the economy need to be turning at full speed. Otherwise, the devastation the lockdown is causing risks exceeding the damage caused by the pandemic itself. Ntshepeng Motema, TRT World, Johannesburg.
Well, for more on this, economist Thabi Leoka joins us now from Johannesburg. Welcome back to Money Talks, Thabi. Now, as with many countries around the world, the coronavirus lockdown in South Africa really has crippled economic activity in the country. So the idea behind this latest cut is to perhaps revive that activity. Can you explain if you believe it'll have that desired effect?
So it is a complicated one to answer because, yes, any cut in interest rates is stimulatory. We do have businesses that are, indebted, and they will be given a reprieve by this 50 basis points. We also have consumers that are leveraged, that are still paying mortgages and vehicle financing, and they still have loans. So a 50 basis points cut will be very important for them. But the other issue is that the majority of South Africans are not those that are leveraged. So an interest rate cut, so short-term interest rates have limited effect in terms of stimulating aggregate demand, and that's the issue here.
Now, how has the South African economy coped with this coronavirus lockdown?
So I guess with great difficulty. Firstly, we were one of the first countries to undertake a very strict lockdown. So as soon as we had a few cases, we went into what we call level 5. So, no businesses were shut. No one went to work, or we worked from home. And obviously that has had a toll on the economy and economic performance. But South Africa is also part of a global community. And as per your clip before, it does show that the global supply chain will have an impact on us even when we start opening up the economy.
Now, we have, during this lockdown, South Africa Airways was basically on the brink of collapse, and the government has so far refused to pour in more money to bail it out. Is that the current situation?
That is true. Even though they have refused to bail it out, but what they've also done is that they have not sold it, or there isn't any clarity on the future of South African Airways and also on other state-owned entities. And we need to get these state-owned entities off the government's balance sheet, and so that we can allocate funding to other places which can be very useful to rev up the economy once we start opening up.
Now, overall, has the South African government done enough to support people who've been adversely affected by the coronavirus lockdown there?
So if you remember, just before the pandemic, South Africa's economy was in a very difficult position. So we had huge debt, widening deficit. The last quarter of GDP in the in 2019, we saw a contraction. So we were in a recession before the pandemic, and so we were not looking good as an economy, and the fiscal space was very limited. So the pandemic found us in a very precarious position with very limited ability to throw bazookas that you're seeing all over the world, especially in developed markets, to alleviate the impact of the pandemic. But we have, done what is necessary. But I do think that more was needed, we are now in our 7th week of this lockdown, and more people are in a very difficult position, unemployed, and increasingly requiring state assistance.
Okay, Thabi Leoka, economist in Johannesburg, thank you so much for joining us on the program.